Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Monday, 20th October. Coming up on the show, a widespread outage has hit websites and apps across the globe that use Amazon's cloud services. Wall Street looks set to open on the front foot with investor focus on key earnings this week and the ongoing shutdown. And President Trump lists what he wants from China in order to do a trade deal.
One of the things I want is China's going to buy soybeans. I want China to stop with the fentanyl. Very, normal things. I don't want them to play the rare earth game with us.
But you want them to, but do you think they will make a deal on soybeans?
I do believe, because otherwise I'm not going to make a deal. No, I want them to buy. Our farmers have been boycotted by China as a negotiating point. I don't want that. Our farmers are great, and in particular our soybean farmers, and I want them to start buying soybeans, at least in the amount that they were buying before.
Okay, let's kick off with what we've just heard there. So President Trump believes that a soybean deal with China could be reached, and it looks like trade negotiations between Washington and Beijing are regaining momentum after weeks of fresh tariff threats. Now, China imported no soybeans at all in September from the US. That's the first time in 7 years. Last year, that figure was 1.7 million metric tons. The president confirmed plans to visit South Korea and other Asian nations in the not too distant future, where trade, security and regional cooperation are expected to top the agenda. The next thing you need to know is that an Amazon Web Services outage has taken down major websites. Amazon Web Services, or AWS, cited an operation issues affecting multiple services. Users have reported problems at a wide variety of sites, everything from Amazon, Canva to United Airlines and Verizon. On social media, users have said they're seeing disruptions on cloud-based games like Roblox and Fortnite, and crypto exchange Coinbase said many of its customers were unable to access its service. AWS says it is seeing a recovery now. And the last thing you need to know is that Apple's newest iPhone 17 is already outperforming last year's iPhone 16. Sales are 14% higher during the first 10 days of release in the US and China. That's according to Counterpoint Research. In China, sales of the standard iPhone 17 model are already nearly double what the iPhone 16 managed in the same launch window. The iPhone 17 now ships with more storage, a better screen, and Apple's new A19 chip, an upgrade from last year's version that's actually being noticed by buyers. So this is another crucial week of earnings coming up and economic data. So here's what to watch.
Time now for what to watch. The government shutdown entering its fourth week, putting a pause on a number of key economic reports. But the Bureau of Labor Statistics will finally be releasing its September CPI report. That's the Consumer Price Index on Friday. The report was originally slated for October 15th, but was delayed due to the shutdown. So all eyes will be on this critical inflation print. Economists, they're forecasting total CPI to accelerate compared to August to 3.1%. While core CPI holds steady at 3.1% on a year-over-year basis. The data giving us more economic insight as the Fed prepares for its FOMC meeting toward the end of October. And taking a look at the earnings front, well, earnings season now, it's in full throttle with a number of key reports on deck, but all eyes, we know, they'll be on Tesla. Elon Musk company announced results for the third quarter on Wednesday after the markets closed. Analysts saying Tesla profits could look strong this quarter due to buyers rushing to get cars before the expiration of that $7,500 EV tax credit. After Musk warned of a few rocky quarters in the last earnings call, investors will be listening closely for any clues about Tesla's road forward, including its robo-taxi business.
Okay, let's get more on what we need to look out for this week with Ethan Devitt. She's Senior Investment Advisor at Moneta. Ethan, thanks so much for joining us on Market Sunrise. Well, earnings certainly seem to be taking centre stage this week. We've got the likes of Tesla, Netflix, Coca-Cola, IBM, Intel. What's going to catch your eye?
I'm going to be looking at some consumer sentiment that comes out of these consumer names, and also really interested to see what tech has to say. I think we know that the resilient consumer continues to be one of the confounding features of the current marketplace. So let's see what the likes of Coca-Cola have to say.
And I mean, we mentioned Tesla there. It's obviously, Elon Musk certainly knows how to grab the headlines. Do you think there's going to be more focus on his robots arm rather than the actual how many cars Tesla are selling right now?
And with Tesla, there seems to be the flooding of the zone around news flow. We've had the executive compensation news flow. We've had the shift away from robotics after there being maybe a focus on that for some time. Now a shift into really focusing, let's see what happens when all of these incentives come off. And we know that they are battling really quite gruesome sales figures, especially in Europe and in the US as well. So I'd say we're going to be looking at that as an indicator, but I do think that the shift has moved away from Tesla onto the AI stocks. They really now are the beacon in terms of whether this AI wave, how long it has to run, and whether there are cracks forming.
Well, let's move on to that. We've got IBM and Intel reporting this week as well. The chip names have been, as you say, grabbing the headlines away from Musk, perhaps. What are you hoping to see from these two?
Well, given that most of this is backward looking, at Vanetta, we've been focusing very much on what this so-called, I think, whether you call it like a shell game, certainly an interconnectivity around many of these AI stocks. And we've been trying to parse what would happen were one project to not come to pass. We've already heard in recent weeks about data centers that are not being built simply because the cost to communities of power there could be a setback. And we've seen this happen consecutively across numerous states in the US. So this is a bit of I think, an implementation flaw when it comes to some of this build out strategy. And what we'll see is whether there's any indication of any slowdown. I don't expect there will be. I think we're still going to be backward looking at these strong orders, at this strong momentum around expenditure. But certainly let's look for as Jamie Dimon has mentioned, cockroaches in the private credit arena. Let's see if there are any cockroaches, or to use a metaphor, canaries in the coal mine in the AI side too.
You got two in there rather than one there, Ethan. Let's move on to that, actually. Zions Bank is reporting after the bell today. What did you make of all the noise out of the regional banks? Is Jamie Dimon right?
Well, certainly the cockroach metaphor did seem to grab the imagination a little bit more than the canary in the coal mine. And I think it is sinister because this is coming off the back of the First Brands and the Tricolor. Really, but I wouldn't call them scandals, but they were certainly rumblings of difficulties afoot in some of this underwriting that has gone on in this massive wave of private credit interest. So now two more regional banks have seemed to whether it's substandard due diligence practices or simply cracks in their credit landscape. Now, that is concerning. We saw, though, when this last happened in early 23, that it was very much an isolated incident. We did not see contagion. We know there's a big difference between the large banks and their diversified books and these regional banks, which are much more concentrated. We've seen a wave of consolidation, so that's probably there. We saw that with JP Morgan and SVB. There's definitely the potential for these large banks to soak up and absorb and really shock absorb the regional banks. So I don't think this is systemic, but what it is an indication of is that at the seams with these high level of rates, we do see some strain and some distress starting to creep in. And it's just when you have these books that are concentrated, not well diversified by regional banks, it is a concern.
Ethan Devitt, as always, many thanks for your thoughts. Okay, we're heading for a short break now, but when we're back, we'll be taking a deeper dive into Bitcoin. Okay, welcome back to Market Sunrise. Well, it's been a volatile month so far for Bitcoin. Talk of the debasement trade seems to be easing, but what do you need to know about seasonality when it comes to trading crypto? Well, here's our very own Jared Blickery with Stocks in Translation.
Bitcoin broke out to a new high of 125,000 and change in early October, and it quickly fell back into its old trading range. But guess what? October is historically one of the best months for Bitcoin, so on today's Stocks in Translation, we are taking a look at Bitcoin seasonality and the next potential catalyst for the king of crypto. And just a quick reminder that seasonality refers to those recurring patterns that we typically see year after year. And in this first chart, we're taking a look at each month of the year broken down, and it's 2018 to 2024 Why did we start at 2018? Because that's when we got Bitcoin futures, and that's when Wall Street started taking notice of Bitcoin. If you go back further, you really have a different animal on your hands. But what stands out here is a few really positive months. So that's 18% in July, 11% median in February, and in October, also an 11% median. And I'm using the median instead of the average because that's right in the middle. If I use the average, you tend to get bigger numbers to the top side and then bigger numbers to the downside in the negative realms. But what you're going to notice here too is that after October, November and December, they skew negative. So unlike stocks where you typically get that end of the year rally basically from October through December 31st, not necessarily so in Bitcoin. However, we do have this positive catalyst right ahead of us. And here's another look at the month-by-month breakdown with win percentage. And what really stands out here is October is 86% positive going back to 2018. And that ties February over here, which was also a good month. And it's a bit bigger than July, which was the best month. So odds are working in the bulls' favor here. And one more thing is that if you break it down on a day-by-day basis, I have the entire year here from January 1st to December 31st, and in white is what the map is telling us. That's, again, the median from 2018 to 2024, and the green 2025 year-to-date. We are right now at the period of time when it historically inflects up. And so the middle of October into the first week of November is a very seasonally bullish time of year. And you can see how some of the swings that we've had in this year, and there was some interruptions, albeit with the post-Liberation Day sell-off, a lot of the recent swings have kind of coincided with the map. So things are definitely working in the bulls' favor right now. We'll have to see what comes of that. And let's take a look at what to watch now, because Bitcoin investors should be paying attention to a number of things. First, we have bank custody of Bitcoin and crypto assets that's starting to roll out right now. The SEC gave the green light on that way back in January, but banks have lots of regulators. They tend to move slowly. So many investment advisors have been waiting for the safety of bank custody, so watch out for these press releases from some of the biggest players. Then, number two, the ghost of Mt. Gox still haunting the blockchain. Way back in 2014, the world's largest crypto exchange failed spectacularly, and most of the confiscated coins has been distributed back to the owners, but we're finally up against a hard deadline on Halloween, October 31st. How fitting. There's a small chance that some whales could emerge and dump their new holdings after getting repaid, but that's just a small risk. Then, in the spring of 26, the IRS is rolling out new tax forms to report crypto sales. It's going to be a little bit more of a burden for crypto traders, and there could be a few jitters around tax day, but it's still a pretty small risk. You do have to watch ETF flows because something is definitely going on there. Spot crypto funds have raked in $40 billion so far this year, and any let-up in flows could signal lower crypto demand, which impacts price. And finally, watch the current trading range in Bitcoin, which has been in place since July from roughly 108,000 to the downside to 125,000 to the upside. And remember, Bitcoin is famous for its rug pulls and false breakouts, both to the upside and also to the downside. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Okay, time for another break now, but we'll be back shortly with today's trending stocks, including one which is shooting back up in the pre-market after losing 99% of its value. Stay tuned. Time now to look at the stocks that are trending in early trade, and there are some big moves, but maybe not where you would expect. Amazon, for example, is barely moving, despite the widespread outage of its cloud services overnight. On the other end, Beyond Meat, it's a small but well-known name, leader in plant-based burgers. Look at its stock. It shot up more than 70% in pre-market, and the reason for such a big move? Well, Beyond Meat tanked after saying it would restructure its debt, but now investors are clearly seeing it as a positive sign. For context, Beyond Meat has lost more than 99.6% of its value over the last 5 years, and it's trading just around $1. Next up, Paramount Skydance, the company which was recently formed in a merger in August, is planning to start mass layoffs on October 27th under CEO David Ellison. The stock is up around 1% in the pre-market after Reuters reported that the owner of CBS, Mission Impossible and Star Trek plans to save around $2 billion. Next up, more deal making, this time in the world of French luxury. While France was just downgraded by a credit agency, some of its big corporations are pleasing investors. Shares of Kering are up more than 3%. The parent company of Gucci and Balenciaga is selling its entire beauty division to L'Oreal for €4 billion. Kering stock has now nearly doubled in 6 months. It stands at plus 94%. As this luxury giant refocuses on fashion and cuts debt. L'Oreal, which is also trading just slightly in positive territory in Paris, will now have the rights to produce and distribute perfumes and other cosmetics, branded Bottega Veneta, Gucci and everything else. Now, enter another big mover, TKMS, the marine defense division of ThyssenKrupp, which made its market debut today at a valuation of more than $4 billion. Shares of the parent company, ThyssenKrupp, fell 20%, while the newly listed TKMS opened sharply higher in Germany, touching plus 80% around midday in Europe, now just under 70% higher. Demand for submarines and defense technology is surging as the war in Ukraine rumbles on, and the US is pushing to strike a peace deal. Just last night, President Trump told reporters that he wants Ukraine and Russia to freeze the war along current battle lines. And finally, the stock that's going to be centre stage this week is certainly Tesla, and the trading volumes are very high in pre-market as investors gear up for its earnings report on Wednesday night. Shares are up more than 1% ahead of the market opening after it closed up 2.46% on Friday. So what should we expect from Elon Musk's company? My colleague Pras Subramanian shared the details you need to trade Tesla this week.
Top line numbers here, looking at $26.27 billion in revenue for Q3, up nearly $1 billion compared to a year ago on 53 cents of adjusted EPS, right? Also EBITDA coming in at potentially estimates $3.78 billion. So we mentioned sales, right? In Q3, we saw that jump to quarterly record of 497,000 EVs sold. Not surprising given the expiration of the EV tax credit. We expected this pull forward, but it was more than people thought. Also record deployments of energy products. That's also a good high margin business for Tesla. But yeah, I mentioned that sales figure, right? So the cheaper Model Y and Model 3 Standard are going to come out next quarter as well. Is that going to help boost sales? We're going to hear about robo-taxi deployments too. We're going to hear more about that, which is their biggest AI play is robo-taxis, right? It's not robots are down the line. Obviously, they're kind of pulling away from the data, that whole their whole Dojo supercomputer. That's not happening anymore. They're going to use NVIDIA chips and start doing that for their own AI training and for robo-taxis.
Let's about China quickly, because Dan Ives over at Wedbush, Tesla bull of Tesla bulls, we know that. He said this about China. Here's what he told his clients. He says, we believe the China story is starting to improve markedly for Tesla. And he goes on to say, should be a tailwind for Musk and company in 26. What do you make of that?
Well, we saw a good month of production out of China, the Giga Shanghai last month. Good numbers there. We saw the new Model Y L, which is like the extended version of Model Y, apparently pretty popular in China. Good registrations there. So I think the brand issues that Tesla faces in China, not really the same as they do in the U.S., right? And Musk is not seen as a negative character there, as far as I know. He's seen as like an entrepreneur and a rich, wealthy guy. Tesla still kind of has some cachet. I think that's why you're seeing that, and the sales numbers are fine there. And that Giga Shanghai is their most productive factory, cranking out cars for all over the world, not just China. So I think he might be right that China is a tailwind for them. The question is, what happens in North America and Europe? Can China overcompensate for any loss there?
Well, our call of the day takes us to Japan, and it looks like the Takaichi trade is still on. The trade has been in full swing since the Liberal Democratic Party and the Innovation Party did a deal to form a coalition government. This means Sanai Takaichi looks set to become Japan's first ever female prime minister. Most analysts believe she will be in favour of more stimulus and against further interest rate hikes. In the past, she has been critical of the Bank of Japan's decisions to raise interest rates. This should be bad for the Japanese yen and government bonds, but good for equities. And guess what? The Nikkei today jumped over 3% to an all-time high today, and the yen slipped, albeit modestly. Ultra-long JGBs, well, they did actually rise, but many are putting that down to a relief that a government has now been formed. A small note of caution though, this is still only a minority government. So in order for her to govern, she'll still need to gather support from other opposition groups, and that will include for an upcoming supplementary budget. Part of that budget could include higher defence spending to deter neighbouring China. She's also called for stricter immigration rules. Okay, let's hear what Charles Schwab had to say about the AI bubble. Here's Liz Ann Saunders.
So Mag 7 as a share of overall S&P 500 CapEx is about a third. So that's a pretty high percentage of CapEx driven by just a small handful of companies. Free cash flow growth for the Mag 7 has gone from more than 60% positive 5 quarters ago now into slight negative territory. This boom, I think the word bubble tends to get thrown around too much. This boom has been largely an equity financed boom. It's come out of cash flows. Now that free cash flow growth has decelerated into slight negative territory, and you're starting to see more deals that get done with debt, it's just kind of a back of mind thing to focus on. The maybe good news is there's less speculative fervor in those mega cap dominant names. The recent kind of hype cycle has gone into more esoteric, micro, small levels, like at the basket level, quantum and drones and the meme stocks. And those have come off the boil a little bit in the last several trading days. But that's where speculation that is very AI driven is now more concentrated in these kind of tiny little pockets as opposed to in the mega cap names that had been all the rage in the last couple of years.
Okay, don't forget, we'll be getting a lot more clues about how the AI industry is going when we hear from the tech companies that report this week. Okay, before we go, let's have a look at where the markets stand. Let's check in on Asia first. And Asia Pacific markets were in the green, as you can see there. Investors seem to take the fact that the rate of growth in China's economy was at its slowest in a year in its stride, to be honest. China's GDP rose at 4.8% in the July to September period compared to a year ago. That was actually in line with expectations. China also kept its benchmark lending rate unchanged, in line with expectations again, with the one-year loan prime rate at 3%. European stocks were in positive territory today, with the region's defence stocks leading gains after a volatile few days. And let's have a very quick look at where US stocks will open. And it's looking like a positive start, maybe perhaps on hopes that a trade deal could be done between China and the US. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.